Hi there, welcome to this week midweek market analysis. So quick one over here. As we are progressing towards the end of the year, we are also getting into the holiday festive season of Christmas and New Year. So do expect the market to perhaps quiet down a little bit, moving into next week and of course the following week, as most traders and banks would probably have their holidays. So if you're actively still trading within this period of time, just take note of a perhaps lower liquidity as well as in a lower volatility kind of environment. So having said that, let's take a look at the analysis and get you guys updated on the midweek for here. Now, on top of that, later on in the we'll talk about some techniques that we use, and hopefully will give you some ideas and help you, in terms of your own development of your own trading plan as well. In two examples, namely the dollar Canadian opportunity as well as the gold XAU USD. Okay, because this week we do have the opportunity to share with you a little bit more in terms of what we call fractal confirmation, looking at multiple time frames to help us identify a better entry, or even some traders would call it confirmation. Right? So do take note of the insights that we're providing in this week's video over here too. Hopefully that helps, right? So let's get started. The dollar index, as of now, you can see overall structure is still intact. This is essentially still a crawl, or you can call it a diagonal. So if you put in your RSI indicator, you do still see that divergence holding, okay, which kind of suggests that the downside has a lack of momentum and the reversal has a higher probability, right? So overall, our bias remains to the upside. But of course, we don't really have that confirmation for entry yet. This isn't a buy setup, okay? But if we can get an impulsive break above that recent high at 104.95, that would give us that confirmation where we can then look for more upside potential target at 108. Okay, so this one probably we're gonna need more time. You might want to keep an eye on this coming Friday. We do have the PCE core index. Perhaps that might give us some movement, some volatility in the dollar. Okay. Now, going into the euro dollar. Okay, we are seeing a little bit of a similar structure, or we say inverse structure to the dollar index. We have this big crawl pattern here as well. If you bring in the RSI, same thing over here. The divergence has been building for some time. So overall, we are looking for the reversal. Okay, so over here, pretty similar is we are waiting for some kind of confirmation. If you can get an impulsive break below 1.0575, that will provide an opportunity to perhaps take a sell with a target at 1.0220 and a stop above 1.0735. The only thing that I don't really, have much conviction on this trade is because this move here looks pretty corrective in nature. Having said that, of course, can the market still just break down impulsively? Obviously, right? So if you're more aggressive in your trade plan, you can consider a pending sell stop, right, which is a breakout trade. Alternatively, you can wait for perhaps a break and you pull back before you take that sell down. Okay, so this is the view on the euro dollar. And then on the pound dollar, we did see the pound move first, right, in terms of a impulsive move to the downside, and right now the pound dollar is doing a little bit of a consolidation. Quite neat as well, because you can see this trend line over here, the market has been supporting quite some time, and we're doing a very nice little consolidation just above that trend line. Okay, so I would say a break below that trend line as well as this consolidation here would definitely give us that momentum that we are probably seeking to bring price back down to 1.1775, right? So if you already have any running trades, some of you probably took it at the top over here with a break, right? The double top on the lower time frame. Do consider to manage your position, of course. You can consider add on a scale in trade with this little formation of a flag. For those of you who are not in any trade, then you can consider this here as a breakout of the trend line and the recent low around 1.2115. for your sell trade with a target here and of course a stop at 1.2240. On the Aussie dollar, we do get a very nice little push to the downside as well, but recent development, it seems to start to develop what we call into a crawl or diagonal structure, which looks something like that. The momentum probably would still push it down a little bit more, but because of the recent structure development, my suggestion is if you have any sell trade, don't be overly greedy. I would say just look for target around 6585, take some partial profits or even consider taking full profits off that trade. There's a good chance then the Aussie dollar might bounce, right? So again, if you bring in your RSI, right, you're already starting to see a little bit of a divergence build up. Okay, so this one here is still early sign, but you can see market came down, but our RSI momentum indicator is actually going up, right? So that's a divergence which indicate a lack of momentum. Okay, so just be cautious on any sell. If you don't have any sell trade on the Aussie dollar, then my suggestion is just be patient, wait for a clearer setup in the future. Now on the dollar Canadian, okay, we have been sharing on this view, and so far the market has been respecting it quite nicely. Okay, we're still expecting the bigger corrective structure of a tree wave to complete. And of course, internally, we can see very nice 1, 2, 3. And then of course, this we're expecting 1, 2, and then 3 here as well. Okay, and recently the market did pull back towards this 618 Fibonacci retracement from the low to this high. And this is the part where I want to share with you a little bit more into the details of how you can utilize multiple time frames, or what we call fractal confirmation, to help you in your execution as well, right? So in this case here, if I drop down to the 30-minute time frame, what we can see over here is that the market is coming down, but on the lower time frame, it starts to form what we know as a crawl or diagonal as well, right? So if you bring in your RSI again, you can see very clear and nice little divergence. Okay, of course, if you're experienced, you can see this pattern. You roughly know that there will be a lack of momentum and the divergence already. So in this case here, how you can utilize the smaller time frame for your execution is, of course, you need to still fall back to the higher time frame where this is still basically in line and we're looking for upside, right? And we're already at a key zone, key level. So a lot of the higher time frame has already established the, I would say, the base work. Okay, we already know the direction, we already know that price is within an area that we're interested in. Then we can go down to perhaps the lower time frame and spot for a better entry. So for example, on the 30-minute time frame, if you put in this little trend line over here, we do have this little high where we can then utilize it as a potential breakout entry. Okay, so that will put us around 1.3620, and of course we can then utilize our stop just below that recent low, around 1.3585 or even 88. Okay, so of course, right, depending on how precise you really want to be, you need to probably also give it a little bit of room for your spread and things like that. So if let's just say very nicely, we have 1.3620 as our potential breakout entry point, and let's say we take the 3585 as our stop, giving it a little bit of room. And of course our target will be based on the higher time frame at 1.3800, right? So you can see if I bring this back up to the 4 hour, that gives us a pretty decent risk to reward trade setup as well, almost close to 1:5, which is definitely very, very nice. So this is something that you can consider as well in your own trading plan, okay, where you utilize a higher time frame and then you go down to a lower time frame for a more precise entry point. And of course, that also help you to lower your risk, okay, in terms of your width of the stop loss, and therefore your risk to reward ratio can be significantly higher. All right, so there's one trade opportunity on the dollar CAD. Okay, let's keep an eye on that. And of course, in line with tonight, we do have the Canadian CPI data, right? That might create some volatility on the market, right? But of course, reminder, always manage your risk because nothing is going to be 100% in trading. Then we have the dollar yen. Okay, so the dollar yen yesterday did a pretty impulsive push to the downside because of BOJ news. Okay, the Bank of Japan actually raised its ceiling for its YCC policy, nothing surprising because I've been sharing with traders for some time. With the current inflation environment and most central banks are hiking rate, but the yen, the Bank of Japan, is not doing anything much. The YCC policy will probably not hold true. Right now they are raising the ceiling, but if nothing changes in the future, there's a very good chance they will continue to raise it, and at one point in time they have to abandon the entire policy itself. Now, in the short run, as they are raising the ceilings of the YCC policy, is going to be beneficial for the yen, okay, because it just means that the bond yield is higher, and therefore it will attract some investment, some funds into the Japan market, and that would cause some strength and demand in the yen. But if the YCC policy collapse, and the Bank of Japan abandons it because it can no longer hold true to the policy, there will be perhaps a loss of confidence in Japan, a loss of confidence in the Bank of Japan as well, and that would then perhaps cause a weakening in the yen in the future, right? So this is something that you probably want to keep an eye on from a fundamental and macro perspective, okay? But if you're trading it short term, you just need to follow with the market flow, with price development, and you're fine. So right now, in terms of technical analysis, we do have this little impulsive push. So right now, we're basically waiting for a consolidation or a corrective structure to develop. If we can get that, then in the short run, we can continue to see more downside for the dollar yen, and we'll be looking for sell opportunity. Okay, but for now, we'll remain patient and see if we can get that corrective structure on the dollar yen first. Now on to gold. Okay, so gold over here is where we are seeing this very little nice crawl or diagonal setup, and of course, if you bring in your RSI, we just kind of broke this here. Okay, but then with this break, we can't get what we call a hidden divergence as well. Okay, what is a hidden divergence? If I were to just introduce or share with you a little bit more for those of you who are very new to this concept, you can see price comes down here, right? It makes a lower high, but if you compare the RSI high peak, the RSI actually went higher, right? So this is again a divergence, but we call this a hidden divergence. Okay. So while we have the break of this regular divergence as the market is here going up, this one is coming down. As we have the break of a regular divergence, we also establish a hidden divergence, which is pretty interesting because hidden divergence usually indicate a trend continuation. So you can see this is doing a lower high, so a trend continuation will expect this to come down, right? So kind of in line with also this entire pattern, but the momentum in the short run might push this a little bit higher to tag that previous high at 1824. So we might see that potential double top form before perhaps that rejection back down, right? So overall, the big structure over here, we're still looking for bearish opportunity. Okay, and this is a game where you can utilize multiple time frames for confirmation, right? So if today you go down to perhaps the lower time frame on the 30-minute chart, obviously this is not the sell setup, right? The recent momentum is high, is pushing higher. There's no reason for you to execute a sell right now. However, if let's say moving forward, we can see this starts to develop into a crawl pattern, or what we know as a diagonal pattern on the lower time frame, coming and retag the top of it. Okay, so a double top on the higher time frame, and then a diagonal setup or a crawl setup on the lower time frame. That gives you the confirmation, right? The confluence to look for a sell trade to the downside. Okay, so this is actually quite a similar concept to what we have covered on the dollar CAD. Something that you can definitely add on into your trading plan and utilize it as part of your execution method. Okay, so keep an eye on gold. I think that will be pretty interesting to keep an eye on, right? Keep watch. And then we have the crude oil. Okay, so crude oil, nothing much of a development. Overall, we remain bullish, and our final target is at 83. Ideally, we want this to maintain above $70.30. This may come down a little bit more to give us that three-wave corrective structure. So if you're already in any trade, you might want to then manage it accordingly. Perhaps take some partial profits as of now, so that if the market pulls back, okay, you don't give the entire profits back to the market, and then you can still look for another opportunity, get involved in the buy if that's going to be a corrective structure. If you do not have any trade running right now on crude oil, my suggestion is just be patient. See if this can develop into a three wave 1 2 3. If it is, then somewhere around this area would be another opportunity for you to buy it. Okay, so that's on crude oil, and we have the S&P. Last week to earlier this week, we do have a very impulsive drop to the equities market. I don't think that's surprising overall from a macro angle, as well as the understanding of the relationship between the interest rates and of course the equities market in terms of money flow. With interest rate hiking, it's generally not going to be beneficial for the equities. So we did see that drop here, and of course from a technical point of view, we have been covering this for the previous weeks as well, where we say that as the market is recovering, you need to keep a very close watch of this trend line, because unless the market is able to break through impulsively, we might still face some kind of rejection, right? And that's what we're getting as of last week and this week. So right now, in the short run, if we can get a pretty corrective nature back up towards around this zone at 3880 to 3900, there might be more sell side to the S&P. Okay, so keep an eye on that. We're probably not going to get any Christmas rally for now, especially with this huge drop. At best, right? We'll probably get a very strong rejection back up, and maybe end of the month of December flat. Okay, probably won't see much of a rally from here on. Okay, so that's all from me for this video over here. All the best to your trading. I hope it provides you some insights. Okay, and all the best. Have a great year and ahead, and we'll see you guys in the next one.